Perhaps from a Grit perspective, you can tell us what you're going to do with this money. We haven't actually got to the most important part, really, is what are you going to do with the financing that you've raised?
So predominantly it's a refinance exercise. However, we've got a ratchet up scheme to do some further developments. So the most exciting one is the redevelopment or improvements of one of the big assets in Senegal, Club Med Cap Skering, which is going to upscale that entire development. It's going to create extra capacity, and the impact this has on that local community is just massive. It's the predominant employer in the region. I mean, it's going to provide places for people to go on holiday, but it's also going to provide a massive amount of jobs for that area, and this is very exciting. You know, the ability to roll this out and expand this with new projects that come on stream in time, and the scalability of the solution does allow us to enter into a lot more impactful projects going into the future. You know, creating an additional sort of ratchet up for a new asset that we might buy in one of these economies is far easier now than having to go through the entire process of starting it from scratch. It's just adding to an existing security pool and then being able to draw on these funds to actually grow. The other aspect of it is this RCF facility that sits on top, which creates a timing mechanism for us for new developments or new investments, where we can draw down on the RCF to get going on projects.
What is RCF?
Revolving credit facility.
Okay.
To allow us to get started on some projects that are not necessarily fully funded up to date, but there's a lot of sort of base work that you want to do to actually get into the ground and prepare for the deployment of capital. And it gives us the ability to do these kind of projects.
I am Marlene Pillay. I'm the head of real estate for Standard Bank. I think what it means for Grit, and maybe I should start as to when I think of Standard Bank, because we are so aligned in terms of what we want to achieve. You know, we are completely committed to capital flows on the continent and enabling those capital flows. And Grit has a growth strategy that needs to capture some of those capital flows and really grow their business, and in a way that is sustainable and in a way that allows them to make African risk accessible to investors who sit outside of the continent.
ESG is a term that's bandied about very widely. How do you make sure that a loan like this meets the spirit of ESG?
Grit's sustainability-linked loan aligns with the LMA sustainability-linked loan principles. And so what we do in our role as sustainability coordinator is we ensure that the structure is robust enough and that it's credible enough to take to the market for lenders to participate in the structure, and that it does tick all the boxes of the principles. And that would really include ensuring that the KPIs that have been selected are core and material to Grit's business, that we're not selecting something which is actually immaterial, that the targets that Grit have produced are ambitious enough that it goes beyond business as usual, and there's a big analysis that sits behind that in historical analysis, in peer benchmarking analysis that's provided to the lender group. And all that information is collated in the form of a sustainability information memorandum. So in that information memorandum, and in Grit's case, it is quite a lengthy document because there was so much ESG reporting available. You actually set the kind of the lay of the land in terms of, at the very top, Grit's ESG strategy, going into what their focus areas are, going into what they're already reporting on from an ESG metrics point of view, and then moving into the structure of the loan. So all the information sits in one place. It's obviously available to the entire lender group. And I think that's really what sits at the core of understanding that we are aligning with the principles.
Bronwyn, perhaps a last word from you.
But unless you have a very strategic partner alongside yourself when you are pioneering something with this amount of complexity, unless you are in it together, you won't get it over the line. And I think that's the reality, is that, you know, there have been players that have tried this before. There might be players that try this into the future, but you have to align yourself with the correct long-term sustainable partner for your business. And that is what Standard Bank is to us. And they know that real estate is a long-term game. So do we. We have a structure or capital, permanent capital structure that speaks to the long-term game of real estate. And it was hairy over COVID. You know, I always sort of dramatically say sort of the 25% exposure to hospitality and 25% to retail, that a half of our portfolio was boarded up. And I say that quite dramatically, but there was never a day when we didn't touch base with each other alongside that. And we did what we needed to do to get through that very difficult period. And I think the Standard Bank team and executive team has seen us in action with our backs against the wall. And they know that we face forward, we don't go backwards. And I think that is why they align themselves with a business like Grit into the future around a structure of this nature, because it is a large deal. You know, we talk about $306 million. If you start putting that to rands, you realize how large this transaction actually is.